July was a positive month for growth assets, with the major equity markets recovering some of the recent lost ground. And we're going to focus on two key themes from financial markets over the month: technical recession and also the rebound in quality growth stocks. So, starting with the US and the world's largest economy, this shrank for the second quarter in a row, triggering talk of a technical recession. Well, why? Well, record high inflation has led to aggressive interest rate hikes from the Fed, and this in turn has impacted business and housing demand. Now, this GDP news came in the same week that the US increased its interest rates once again by 0.75, and this was for a second straight month. This is the most forced tightening since the 1980s. Okay, so what's the reason? Well, US inflation hit 9.1% in June as food and energy prices increased once more. However, it's worth noting that the Fed is relying on a strong labour market to avoid a recession, so employment data will be under real scrutiny over the next few months. So turning to the second theme, and it's been recovery in the quality growth stocks. Now, at the end of the month, we've seen better than expected results from tech giants Amazon and Apple, and they're showing their financial resilience in a challenging environment. And on the back of this, it's no surprise that growth and quality provided the best factor returns over the month. Value made a positive gain, but lagged the other key factors over July. Turning to defensive assets, we've also seen a recovery in prices for the 10-year UK and US Treasuries, as fixed interest markets are starting to price in a peak in the future for interest rates. So in summary, financial markets continue to see volatility, and in the short term at least, key economic data will be setting the tone for the coming weeks.